The next question is, during 1969, how many banks were nationalized? I have told you in the lesson, there were two batches of nationalization. The first batch was in 1969 under the leadership of the then Prime Minister Mrs. Indira Gandhi. So during that period, during that time, on July 1969, 14 banks were nationalized. You can always easily remember this figure 14. It is a fortnight, just related to a fortnight. 14 banks were nationalized. Which are the 14 banks? We have already seen the list. Just for your easy access, I have given the 14 banks in a separate slide, which you can see for yourself. These were the 14 banks that were nationalized in July 1969 by Indira Gandhi. Then the next question is, during 1980, how many banks were nationalized? Again, after nationalization, for a brief period, Indira Gandhi was out of office. And she came back for her third tenure in 1980. And during this time, 6 more banks were nationalized. The answer for this question is 6. The second batch of nationalization happened on 1980, and the banks that were nationalized are Andhra Bank, Corporation Bank, New Bank of India, Oriental Bank of Commerce, Punjab and Sindh Bank, and Vijaya Bank. These were the 6 banks that were added to the list of nationalized banks in 1980. With that, the government has stopped nationalization of banks, because 1990 came, a new philosophy of thinking came that we should no more nationalize institutions. So an era of liberalization, privatization and globalization dawned in India under the great Prime Minister Mr. Narasimha Rao, and as a result now we don't see any further nationalization, and even the nationalized public sector banks are slowly losing their character of public sector, and their shares are available in the market for private persons. Maybe in another 10 years or 15 years time, all these nationalized banks and public sector banks will lose their character of public sector, and all India will have only private sector banks, and maybe there will be a lot of consolidation among the banks, and as a result we will have some 10 or 12 very big banks who will all be operating from the private sector. So that is only a future vision for us. So as of now, we have 6 banks nationalized in the year 1980. Then this is another question, a very interesting question. Which committee recommended the phased introduction of computers and the mechanization of banking activities in India? I have lived through this phase, and you will all be, the youngsters will be very surprised to know there was a total objection from the unions in introduction of computers in banks. I know the fierce fight that the unions started when the management of the banks wanted to introduce computers. Upon our dead body you can bring computers. We brought in Calcutta, as a matter of fact, we purchased some computers for regional office computerization. We could never take these computers into the bank. So it was all stored somewhere outside, because whenever we tried, the employees used to block it. The clerical staff and the award staff, they used to block all these things. And now today, Calcutta is leading in IT sector, because there is a total change in mindset. And they have understood that banks cannot keep technology out. When technology is knocking on your door, you cannot keep your door locked, and technology will break all barriers and sweep you. And therefore, the technology was absorbed by banks, of course, little in slow portions, because earlier there was a lot of misapprehension that introduction of computers will result in unemployment for people. But all those things are only old past now. Today, without introduction, without technology, no bank can survive. Actually, technology is the driving force of banks today. Mr. Kamath, who was the chairman of ICICI Bank, he said he is not running a banking company. He is running a technology company who is doing banking business. So to that extent, technology has played a major role in all, and has played and is playing a major role in all the banks today. And all this was started by one great person, Dr. Rangarajan. He submitted a report in which he advocated phased introduction of computers in all the banks. He used the word phased because there was a stout opposition from the unions. Over a period, the unions also understood the importance of computers in bank, and as a result, today where we are. But the initial action for this gargantuan achievement was done by the great Mr. Dr. Rangarajan, who was the governor of Reserve Bank of India, but at that time he was the deputy governor. He is the person who put the seed for computerization in banks, which seed has now grown into a huge giant tree, an all-encompassing tree which touches all actions of a bank. The credit for it goes to Dr. Rangarajan, who is a very great, whose contribution is very great to Indian banking. The next question is a very interesting question and a very subtle question. Earlier, TDS means what? Tax deducted at source. It was not deducted under this deposit. But with effect from 1st June 2015, TDS is deducted from this deposit also. What is the name of the deposit? So for answering this question, you should understand what is TDS. TDS means tax deducted at source. Now people, it was first initially made applicable to fixed deposit. If any person gets interest in a year from fixed deposit more than 10,000 rupees, then for that person 10% of the income should be deducted and remitted to income tax department at source by the bank. This was introduced and it was made applicable only to a fixed deposit. Savings bank deposit, it was not made applicable. Even today, in savings bank deposit, there is no TDS. Then current account, we don't pay any interest at all. Therefore, there is no question of tax deduction at source. Therefore, at that point of time, the only deposit in which tax deducted at source was applied was fixed deposit. But there was one small deposit called recurring deposit, which was omitted. As a result, this was a loophole in the system. So as a result, what happened? Banks started introducing variable recurring deposit. Recurring deposit means every month you should put a fixed sum, 10,000 rupees, 10,000. Suppose you want to buy a car for 5 lakhs, then you start saving every month 10,000, 10,000, 10,000, 50 months you will get 5 lakhs, you can buy a car. But then the banks started a new deposit scheme with a variable recurring deposit. That means you can, in 1 month you can put 20 lakhs, next month you can put 2,000 rupees, like that. So people, instead of putting their money in fixed deposit where TDS is available, they will put the money in recurring deposit. And every month pays 20 lakhs is there, means 20 lakhs they will put in recurring deposit, and every month they will put some small amount every month by way of 1,000 rupees or 100 rupees in that deposit, so that the recurring deposit character is maintained, which will result in TDS not being applied to that deposit. This was a loophole in the system, and this loophole was removed in 2015. In the budget of 2015, where TDS was made applicable to recurring deposit also. So today, even if you do all this gimmick to come out of tax deducted at source, you will have to pay TDS. You cannot escape it. It is applicable to fixed deposit as well as recurring deposit. For savings bank, even today, there is no TDS. If you provide the PAN number, there is another nicety to it, which you please remember. If you provide the PAN number to the bank, then only 10% will be deducted from the interest income you get, if it is more than 10,000. If you don't provide, then they will deduct 20%. Therefore, in your own interest, if you have fixed deposit, or if your family or your father, mother, they have fixed deposits with the bank, in which the interest income will be more than 10,000 rupees, please ask them to provide the PAN number, so that the income tax, the tax deducted at source will not be more than 10%. Next, question number 15. The minimum period for which a commercial bank can accept term deposit. What is a term deposit? Term deposit is nothing but a fixed deposit. You deposit the money for 1 year, 2 year, 5 year. What is the question? What is the question? What is the minimum period for which you can accept? Some business people used to come and they will say, I have got 1 crore, I want to deposit for 15 days. Because for 15 days, he will, suppose he puts in current account, he is not going to get any income. So he will deposit that money for 15 days and he will get 3% income. Some people will put for 1 month, some people will for 20 days, some people will for 15 days. All this is possible for business people with a lot of money. Normally, middle class people will not be depositing for 10 days, 15 days and all. This kind of deposit I have seen only in business people who know, suppose some man has, some businessman thinks after 15 days he will require some 1 crore for some investment or for some business investment. And he has made all the money available now. But he doesn't want to use it. Suppose he will put it in the current account, it may be withdrawn. So what he will do is, he may use it for some other purpose. It may get mixed with all other income and expenditure, and sometimes, when he wants that money, it may not be available. So what he will do is, he will come to the bank and say, sir, you please open a 20 days fixed deposit for this amount. And we used to open a fixed deposit for 20 days. And exactly on the 20th date, when he needs the money, he will come and withdraw the money and use it for the purpose for which he will do it. Now the question here is, what is the minimum period for which a commercial bank can accept term deposit? The answer is 7 days. Now you cannot accept deposit for lower than 7 days. As per RBI guidelines, you cannot accept deposits for lower than 7 days. The minimum period for which you can accept a term deposit is 7 days. State Bank of India has requested Reserve Bank of India to reduce this to 3 days, and it is under consideration of the Reserve Bank of India. So far as the minimum period is concerned, it is 7 days. You can accept a fixed deposit for 7 days. What is the maximum period? In 80s and all, 80s, 70s and all, there was no maximum period. We used to accept deposits for 20 years, 25 years and all. But then a bank is running a very huge interest rate risk. Because in 20 years, what interest rate is going to, what rate changes are going to come in interest rate, nobody knows. If you accept a high cost fixed deposit for 20 years, after 10 years, interest rate may fall to 5%. But you will continue to pay 10%. So banks were making that mistake in the earlier era, but subsequently, the Reserve Bank has given some guidelines. The Reserve Bank has advised, see the nicety of the Reserve Bank of India. Reserve Bank sometimes, they don't use their force. Even though they have a lot of weapon and arsenal at their command, they don't give it, you shall do it. They don't command you, the banks. So they have told the IBA, you please decide among yourself. Indian Bank Association is the body where all other banks are members. So IBA, in their joint wisdom, they have decided they will accept fixed deposit for a maximum period of 10 years. It is not given by Reserve Bank. Reserve Bank has left it to the wisdom of the banks. And the banks among themselves, they have joined together in Indian Banks Association, and the IBA guideline is you shall not accept a fixed deposit for more than 10 years. So the minimum period is specified by Reserve Bank of India as 7 days. The maximum period is as per IBA advice, namely 10 years. Why they have given this maximum? Because a bank accepting deposits for a very long period is running into huge interest rate risk, which is not advisable.